Debt ceiling bill set to work its way through Congress now. Joining us live from the White House to break it down is National Economic Council Deputy Director Bharat Ramamurti. It's good to have you back on. So does anyone like this deal? The Republicans are complaining it doesn't go far enough with spending cuts. Democrats are complaining that they caved on work requirements and to other Republican demands. What's your take?
Well, I think it's usually a sign of a good compromise if there are some folks who are a little bit unhappy on each side. But I think ultimately what we have here is a good, fair deal that reflects the realities of the divided government situation that we have. A deal that, number one, takes the possibility of default off the table through 2025 and protects our economy from the possible recession that could have occurred if there was a default. A deal that protects Social Security, protects Medicare, protects Medicaid, important priorities for the president. And number three, all of those signature pieces of legislation that the president passed in his first 2 years in office, the Inflation Reduction Act, the CHIPS bill, the infrastructure package, all of that is protected as well. All those important investments will continue to flow into the economy. So overall, we think that this is a very good deal and something that we would like Congress to pass well in advance of the June 5th deadline.
Does it impact the economy at all?
Well, look, I think overall what you have is a roughly maintaining the level of spending that we had in the last fiscal year. I think the macroeconomic impact of this deal is likely to be fairly minimal. As your last guest was highlighting, really what's driving the economy right now is an incredibly strong job market, 3.4% unemployment, wages going up across the spectrum, especially for those at the lower end of the income spectrum. And when the American consumer is strong, the American economy tends to be strong, too.
Bharat, we just had John Chambers, who back in the day was part of that S&P downgrade in 2011, who argued that in order to get escape velocity from this constant rotating series of crises regarding the debt ceiling, you have to address taxes, and taxes have to go up. Who's going to let that happen on their watch?
Well, look, Democrats successfully imposed some new taxes on very large corporations just in the last 2 years. A 15% minimum tax so that no company that's making billions of dollars in profits can get away with paying $0 in federal corporate income tax. That just went into place last year. So I'm not that negative on the possibility of getting these taxes into place. The president's budget calls for the very wealthy and big corporations to pay their fair share. Historically, when Democrats are in office, they're able to get those targeted taxes into place, and I remain optimistic that we can do it going forward as well.
Do you think the compromises being made regarding the funding of IRS agents is going to significantly impact compliance for the worse?
Well, what the IRS and the Treasury Department are saying is that the nature of how this funding was shifted, because it was shifted towards the back end of the budget window, means that in the short term, the IRS can continue full speed ahead on all of the improvements it was making thanks to that funding infusion it got last year. Remember, part of that is enforcing our existing tax laws, making sure that people can't get away with evading their tax obligations. Another big part of it is just improving the quality of service at the IRS, and we've already seen some of the benefits of that in the short term. Some of the data the IRS has put out has shown that refunds are getting out the door quicker. People who are calling the IRS with questions are getting their calls answered much faster than before. It's important of just making government work well for the people who are funding it.